thank you all for coming out here. It's a pleasure to give you an update on Golden Queen Mining and the Soledad Mountain project in Southern California. Here, the front slide, you can basically see a photo of the mountain looking to the south. Los Angeles is basically behind the mountains in the far distance there. And you can see right away that, as the previous speakers were describing, geography does make a big difference. In our case, California is a challenging environment to get permitted in, but once you're permitted, you can have some of the advantages of that state. And you can see the infrastructure just on this slide. We have a 4-lane highway that runs right up to the project, a paved road that literally circles our mine, and just on the far left-hand side of that slide, actually a railroad that runs down into Los Angeles, which is important for one of our business lines, an aggregates business, which I'll get to a little bit later. So all the regular forward-looking statements. The company today has a market cap around $20 million Canadian, which has come down this year. We don't think entirely rightly. We are currently in the middle of a rights offering, raising $25 million US. That rights offering is backstopped by my family, who are roughly 30% shareholders, and also participants in the joint venture that owns the other half of this project. The project is owned 50% by the public company and 50% by joint venture investors led by Leucadia National Corporation from New York, but also including my family. So this is a company with very significant insider ownership. My family have been investors in this company since the 1980s. We stuck with the company through its first round of permitting in the 1990s. We funded the second round of permitting in the 2000s. And we've contributed roughly a third of the construction capital since the project went into construction in 2014. So the highlights today. We are now a producer. We've been producing gold since March 2016. We're a US-based mine, actually generating positive cash flow from operations. Our EBITDA in 2017 our numbers haven't been finalized, but will probably be in the range of positive EBITDA of about $5 million. We spent about $16 million of sustaining capital. So the project did consume capital this year, but we expect that to turn positive in 2018. We're located in a mining-friendly part of California, Kern County, as already stated. We think the project has a good economic profile over a long lifetime. We have a current feasibility study that estimates we'll keep producing here for another 10 years or so, and we think there's potential to expand that. The focus right now is really fine-tuning the project and also getting access to higher grade material in the east pit. We started mining in the northwest in the main pit, phase 1. We were disappointed somewhat in grade in those first 2 pits during 2017. So far, we've press released just in the last week or so that our first 5 benches on the east pit, which is where primary ore production will come from during 2018, 2019, through about 2022, has been reconciling very positively. I refer you to our most recent press release from January, where we reported roughly 11 or so positive reconciliation on grade and 50% or so positive reconciliation on ore tons for, so far in the east pit, about 60% positive reconciliation on gold ounces contained as we're mining through the reserves in the east pit. We are basically producing around 11,000 tons a day, between 10 and 11,000 tons per day. We think we can get that eventually up to around 12,000 tons per day. We think we have growth opportunities to the project, really just from permitting additional heap leach pad capacity. And as said, I'll get to the aggregate sales later. So the project is located right on Highway 14, about 90 miles northeast of Los Angeles. It's about an hour-and-a-half drive from Los Angeles International Airport. Mojave itself is a small town of a few thousand people. Kern County is unusual within California because its politics are very conservative. Its economy is largely based on natural resources like oil and gas. And it's been a very supportive place for us to make partnerships with our local regulators and permit the project successfully. It matters a lot in California what county you're located in, and Kern County has been a very good place to operate. And as I've mentioned earlier, the advantage of being in a place like California is that you get highways, grid power, railroad, and all the sorts of utilities that are really helpful in making a project work successfully. Here's an overview of the project. It's a series of pits mined from this mountain. It's a volcanic remnant of a collapsed caldera. We started mining the northwest pit and the main pit phase 1, essentially because those areas were closest to the crushing plant and we could get started with fewest trucks. We're now this year transitioning to the east pit. We've been mining in the east pit since about October or November. We're going to be transitioning to 100% ore from the east pit over the next couple of months, and the east pit will produce essentially all of our ore for the next 4 or 5 years. And that's, as I said, where the positive reconciliations have been turning up that we press released last week. Here are a few overview photos of the site. This is an open pit heap leach project. We've just built essentially 2/3 of our life of mine heap leach pad capacity. We use 3 stages of crushing: a primary jaw crusher, secondary cone crusher, and a 3rd stage high pressure grinding roll. We're using the HPGRs because we found that on our ore it gave significantly better recoveries as well as lower operating costs due to efficient use of power. And our recoveries have been tracking very well. In our published results, we believe that we will be able to achieve our feasibility study target recovery rates of around 75 to 80%. That is what actual operating recoveries have looked like so far. Here's a final view of the heap leach pad. We use conveyors and radial stackers to heap the material on the pad. Here are the most recent published operating results from the 3rd quarter of 2017. As said, 2017, we produced cash from operations before sustaining capital. There was a significant sustaining capital in 2017 from the heap leach pad expansion, as well as several additions to our mining fleet. But we believe that 2018, if we can continue to see the results that we've seen to date in the East Pit, we think our grade should be significantly better in 2018, and the financial results should be significantly better as well. Our cash cost in 2017 has not been finalized, but will probably come in the range of $1,100 an ounce. We think we can do a lot better than that in 2018. Here's an overview of the permit situation. So the red outline is the permitted land that we owned when we filed our permits in 2006, and that's basically the land within which we're constrained in our current feasibility study. We own significant land around that red boundary, and we think that we'll be starting the process of increasing the permit boundary, trying to add space for a second heap leach pad over the next couple of years. We believe that we can extend the mine life significantly merely by adding pad capacity, which will allow us to take additional ounces and actually put them on the pad and recover them. You can see on this slide also some of the infrastructure I was talking about, a highway and a railroad on the east side of that slide. We're going to be doing about $1 million of drilling starting late in January, continuing into February, hopefully with results by sometime in March. We're essentially looking to see whether there are some vein systems within the mountain that were not properly accounted for in the current feasibility study, essentially because our results so far in the East Pit have encouraged us that there are more veins than were already modeled. So we think there's geological upside within the current mine plan. As said, we're selling our waste rock as aggregate material into the Los Angeles market. This project is permitted both as a gold-silver mine and as an aggregates quarry. We think that the potential is here to be an aggregates quarry for years and years after the end of the gold-silver life. We think that this is both an environmentally friendly way for Los Angeles to get construction materials and a good way for us to send our waste rock off-site. So the people, my name's Thomas Clay. My family have been major investors in this company since the 1980s. We're still roughly 30% shareholders today. We are underwriting the rights offering that's currently underway, and we also participated in the joint venture investment. We believe that the potential is here to build a U.S. project that will be producing over the next 10 plus years, and that during that time, U.S. gold producers will become valuable assets. Bob Wallish is really the most important person on this slide. He's the guy living in Southern California running the project on a day-to-day basis. He has a long track record of general manager positions at mines across the world. He was previously heading a larger copper project in Chile, but he wanted to come back to the U.S., which is how we were able to attract him. And our directors are people with significant mining industry experience: Brian Coates from Osisko, Paul Blythe from Quadra FNX, Barney Guarnera from Barry Dolbear. So again, to summarize, we are a gold producer in the United States, in California. We've been producing for just under 2 years. We are entering into what we believe will be higher grade areas of the deposit in the East Pit. We've got a team that successfully built the project on budget and is operating it and I think optimizing it in a way that will make this a valuable asset for decades to come. We're in a mining-friendly part of the United States with excellent infrastructure, and we think that 2018 will be an interesting year as we see the results continue from the East Pit. Thank you very much.